Today, I have with me Avnish Bajaj, founding partner at Z47.
Reputation really matters. And the reputation is not when things go well. The reputation is when things don't go well.
Yeah, Vijay told me exactly that. I'll not name the company, but said the founder went to jail for unnecessary reasons, and only Z47 was one to bail the founder out of jail.
I mean, we were all there. Nobody ran away. My colleagues, Tarun and Rajinder, visited him. He remembers that forever. Reputation matters. In our Monday meetings, we discuss people, not deals. We have trackers. We would be tracking them.
From a founder's perspective, I can share my perspective on what changed at Z47.
Yeah.
So for a longest period of time, I saw McKinsey consultants were part
अभी
of
भी
it.
है.
अभी भी हैं.
हाँ, but अब वो अपने आप को McKinsey नहीं बोलते हैं.
You have win founders like Bhavish in all their ventures. How do you do that?
When you look at Tata, Ambani, Birla, Adani, all of these guys, they are in multiple businesses. That's considered a feature. When a tech entrepreneur wants to do multiple businesses, it's considered a bug. Why? What's the difference?
So you have been building this institution for last 18 years or 19 years?
I'm not going to acknowledge my age, but yeah, go ahead. What's your question?
So my question is, when you first went out to raise LP money in 2006, how are LPs thinking about allocating dollars to India, and how has it transitioned?
So actually, देखो 2006 में
Hi, this is Siddharth Aluwalia, your host at Neon Show and managing partner of Neon Fund. Today, I have with me Avnish Bajaj, founding partner at Z47. Z47 has been one of the top VC firms in India. Also, I consider them to be one of the most competitive ones, like almost operate like a startup. And you have recently won 3 of the best SaaS companies that have ever started in the recent 2-3 years from India: Atomic Work, Rocket Lane, SuperOps. I consider Neon to be very fortunate to be part of Atomic Work. And so my first, question to you, Avnish, is, can you share more on the process of winning the best companies and the best second-time founders?
Sure. So first of all, I'm very, very excited to be here. Said we've interacted many times in the past. I just found out today that you are the second most listened to. So tell me that ranking.
So if you compare podcasts by VC firms globally, the largest globally is Y Combinator, and these are YouTube numbers because the rest of the platform numbers are not public. So highest is Y Combinator, second is Neon, third is A16Z, and fourth is 20-minute VC. So this is the global ranking.
Z47 podcast, Matrix Moments.
Up top 10 mein ho gaye.
Top 10 mein. Achha, thank you. So I'm very excited to be here and great job. And you asked me a question how we managed to win some of these deals, and thank you for putting. I think there was some ranking which came out also of the top SaaS startups from India in the last 2-3 years, and these companies were in it. But let me flip that question back to you. You are, depending on how you count it, most likely a third-time founder yourself. So if you were to raise money again, how would you be? And now you are in the money giving business or the investing business.
I'm more in the money raising business. You would know it better.
Yeah. And by the way, I also Freudian slip. I said money giving business. It should be called the investing business. Yeah. But all of us have been giving and not receiving. How would you, if you were to start a company again, evaluate a VC differently from when you were to doing it the first time?
So I think when I was doing it first time, started a company in 2012, sold it in 2017. Like, I was chasing VCs for attention, right? It was just the reverse. And today, at least for the best founders, top 1 percentile of founders, the VCs are chasing for founders' attention. So the game has completely flipped, right? And
so I think that's the key, right?
And the brand value of a VC doesn't matter, because a second-time founder would discount you on whatever you have done in the past. His last relationship with you is the one that matters the most.
And what would you look for beyond the money?
I would look for a VC to be humble first. Yeah. Right? Sit with me as a peer.
Yeah.
Then I would think of any other value add.
Yeah.
Right.
Yeah. Or value add bhi chahiye. As a second, third time founder, aapko value add kya chahiye?
Nahi, jaise for example, I'll say it very humbly. Then in case of Atomic Work, I have worked with Vijay on customer intros or whatever intros is possible. Right. So similarly, we have founders who are LPs in our fund, right? So I asked them the same, please, give us more intros to founders, to LPs. So I think the battle never stops. And a second time founder, I have seen them at least best of them, like I know Vijay, he's a very, very close friend and a mentor to me from Atomic Work, that they are more humble when they're starting because they know this time they'll fail because of themselves. If so their ego should not come in the way. So
I think basically, and we'll pick up on the Vijay example, when you are starting the second time, and by the way, many of them have made money also already in their previous life. I think of myself, if I were to start again, what would I look for? You said humility. Yes. I would want a potential thought partner.
Yeah.
See, typically, if I'm doing something the second time, or a second time founder, when they are starting another business, they are generally working in their domain. We as VCs, if we know more about their domain than they do, we have a problem.
Yeah.
Right? So I don't think wo jo value addition in the traditional sense makes any sense. I would want a thought partner, and things you said. I would want someone who would work hard for me, with me, right? And I think that's distinguished us over a period of time. And it's not the investing team at Z47. It's actually the operating team. I can't tell you how many times I go to board meetings where the founder, where there are other investors also on the board, and actually to little bit needle the other investors, the founder will say, "Meri puri team Z47 ne banayi hai. Ye hire Z47 leke aaya." So our operating team is a very core part.
And you have two separate teams, investing team and operating team?
Yes, our investing team is there, but I don't think of them as separate. And I'll tell you why. When 5, 6, 7 years ago in the business, or even if you look at VC as traditionally in how it's done in the US, the teams are built by the investor themselves, right? I used to do that a lot 5, 6, 7 years ago. So what is the investing business? I think all these things, marketing, you said, business development, human resources, it's all investing business. So I don't think of them as separate teams. They are separate skill sets, right? So to me, that the fact that you said humble, I think people think of us as warm, nice people to be around. That really helps. Specifically, doing some of this blocking and tackling, helping people, with their core needs helps. But I'll tell you, reputation really matters. And Vijay has given us credit. We have, and the reputation is not when things go well. The reputation is when things don't go well. And Vijay is familiar with one of our companies where things didn't go well.
Yeah, Vijay told me exactly that, right? I'll not name the company, but said the founder went to jail for unnecessary reason, and only Z47 was one to bail the founder out of jail.
I mean, we were all there. Nobody ran away. My colleagues Tarun and Rajinder visited him. He remembers that forever. Forever. I was speaking to him 6, 8 weeks ago when his new round was going on, and he still remembered that, right? Reputation matters. So I think why Super Ops, I'll give you an example. So Super Ops, Arvind started a company the first time called Zarget. He exited to Freshworks. Second time he came and told Tarun that, you have a right of first refusal on my round, right? And I asked him why. He said, because Tarun was the only one who was giving me advice that was the right advice for me, not just, what I, for himself and stuff like that. So I think that really matters. So how do we win these? For me, I think if you look at venture capital, if you look at most businesses, almost everything can be copied in no time. Reputation cannot. Reputation is a moat. Reputation compounds with time. And I think that's what's getting us into
I'll take one more example. I would have loved to be part of the journey. Aman from Grey Labs, right? So I can recall from our first conversation that only Neon and Z47, right, were the two people speaking to Aman.
Yeah.
Like Aman had an India thesis, right, which, at Neon, we feel that we are too young to just focus on India thesis. So our thesis only like as a small fund from India to the US, right? So that's why we couldn't partner, but else would have loved to partner with him.
Yeah.
But, how do you are the first person when a founder is thinking about it?
And that's our goal. Our goal is actually we work very collaboratively with firms like yours, with many other firms, with the other top tier VC firms. Our goal is to be the first into the cap table. It doesn't have to be the last into the cap table. So if the founder comes, in Aman's case, he didn't want to dilute. So he said, I'll take only one. But many second time founders, and I, by the way, encourage them to have multiple voices around the table. So if there are multiple VCs, we encourage them to. But so I think the other piece that differentiates us in this is that we are an operator-led VC.
Okay.
I have been a founder before. If you look at Aman's case, Pranay was chief of staff of one of the best known SaaS founders for 7 years. He's seen every piece of it. He has been in touch with Aman for probably 2 years, right? And so became that thought partner. Also, in some cases, for you to earn your way to be a thought partner, you have to know domain. So if you look at two things that differentiate us from even our peer set, it is operator-led and domain. So CV is, and by the way, many of them are former founders. CV is a former founder. Akash is a former founder. All of us had me, a former founder, Tarun, former founder. So if you look at that, and then the fact that people have been in certain domains, I think that if I were to start another business, actually that's what I would look for. Because a founder is able to understand another founder's journey. Sometimes actually becomes too empathetic. But I think that is one thing that is very, very differentiated for us. And the last piece, and it will come back to the Aman example, is that these are relationships built over a long period of time. We are not transactional. We will go meet people. I'll give you another example. Anil Goteti who's now doing Scapia. Vikram knows him for I don't know how many years. When he was at Flipkart. And we used to meet him at our events. And then he said, I want to start. So I think just that builds over a period of time.
But don't you think second time founders are the most demanded in the ecosystem? So they would, once they become a second time celebrated founder, they would give their time very tightly, to build even a relationship.
But tell me, if you were to start a business again, what would you look at? Actually, you have started a business again. It's called a fund.
Yeah.
Do you give your time very tightly?
Yeah, obviously. My time is for founders, right?
No,
so
but
a bucket of my time is for founders.
Yeah.
Loosely held.
Yes.
Right.
But my bet is that if you feel that you will learn something,
yes,
you will give your time.
Yeah.
So that's the bar. The founder has to feel that they will learn something, right? So I'll give you another example. So when Jiten, well-known founder, Jupiter, I remember Vikram telling me in 2017 or 18 that, there's this trend of neobanks. I said, ye kya hota hai? So I started doing secondary research, learning. Our financial services team would keep feeding information. Vikram did a podcast on neobanks with Jiten way back.
Okay.
2016 or 17. That was how neobanks started getting talked about in India. Otherwise, there was no talk. It was all a Western concept, right? So Jiten, when he was actually going to start, said, मेरे को Sequoia का भी पैसा लेना है because I've worked with Mohit.
Yeah.
And Vikram, आपसे भी लेना है because you get the concept. So I think the best second time founders, and frankly, that's what I would do. I would be hyper curious. I want zero chance of failure. 90% of startups fail. As a second time founder, I would say, if I fail, then it's really bad on me, right? If after knowing all this, I'm still failing. So what would I do? I would surround myself with the smartest people. And I think the best founders think like that. And our job is to get into that consideration set. How do we get into that consideration set? Doing things like podcasts, right? Putting our point of view across. Networking very aggressively, quote unquote, right? Going and meeting people, not just for the transaction, just to share ideas. That we do a lot of events. And by the way, some of this, to me, there is a transaction side of the business, but there's also a mission side of the business. And for me, a lot of this fits in the mission side of the business also. Part of the mission is to bring everybody together. Fortunately, today our events tend to be fairly open architecture. We invite all the VCs. They thankfully come. So we do all of these things to essentially for the person to say, yeah, man, I am starting a new journey. it's going to take 10, 15 years. I want somebody by my side in it. It's not the money, right? And I joke with people like Jitain and some of these guys, that you say that, we want to work with you and this and then the price is like the serious high market price. There's no discount. But I think, like you said before, this is a situation where the access itself and being able to partner with them is the win.
Yeah. And I think it's getting more narrower and narrower.
Yeah.
With every passing year.
Yeah.
And you are spread across, so many sectors also. B2B software, D2C.
Yeah.
You have fintechs like Razorpay, Stable Money, B2B marketplaces like Off Business, Captain Fresh.
Yeah.
So how do you win across these many categories? It's not just one category.
I think it goes back to what we discussed, which is we have operators who are experts in each of these sectors, right? So I personally, and now clearly as a firm, we don't believe in the generalist model. We are a specialist firm. So, and sometimes it's not easy because all these sectors go through our ebbs and flows, right? So, and I joke up to everybody here is tenured, so people also have seen this. But every year, some sector is hot and all the other sectors have FOMO about that sector. Everybody wants to work in that sector. Whether they know anything about the sector or not is irrelevant, right? So, Sudipto does B2B. He's doing advanced manufacturing. Pranay does SaaS and AI. Cash knows bunch about AI. CV is doing consumer. So on and so forth. We have financial services, and we are all paired at various levels. We think of ourselves as squads. And the idea is like a pod structure, right? But that pod is a sector pod, right? So that sector pod, I tell the sector leads that think of yourself as a CEO. You have to win the most deals in your sector. So therefore, many of our podcasts you will see are actually around depth of content in that sector, right? So I think that's what gets us into a bunch of these. And then, of course, ultimately portfolio referenceability, right? People want to associate with winners. So when you have winners, we have off business and B2B. So by definition, B2B companies think this is great. If the good B2B founders start working with you, next thing you know, we have Farmart, we have Captain Fresh, we have WeGrow. It all starts working like that. Same in Razorpay, payments, financial services, 5-star, consumer, Ola. Today, if you look at in some of the new age sectors, we are the only investors in EVs, in AI. So I think it starts compounding. It's a compounding flywheel.
And any other thing, like what I understand, if I have to summarize, that it's an operator-led firm, and that's what gives Z47 the differentiation. Any other differentiation that you think?
I would say operator-led, domain specialist, founder referenceability. Founder referenceability, you said earlier, you had asked, how do you win these, right, across? We are in the situation where we say when we are competing in it. First of all, I think there's a nuance. Generally, we won't be late to a deal. Generally, we would have, if we are doing our job well, we would have known about the founder. And by the way, in our Monday meetings, we discuss people, not deals. So the whole DNA is a little bit organized around, founders and how do we work with them. We have trackers. We would be tracking them and I'm not giving away any secret sauce because anybody can do it. It's all about the execution, right? So you have that. Then you have these events and all of that is creating the pull. So I think having the domain, having the operators, and then finally, when it comes to, I said we want to be the first into the cap table. Generally, we are not the highest price payers. The founder will say, what's your pricing? We'll generally say, you won't like it. You want to work with 2 VCs. If you want to work with 1 VC, okay, let's agree on the construct. If you want to work with 2 VCs, then you go find the other VC. My guess is that VC will set the price. But most of the time, founders will ask us, we'll put our best foot forward, knowing that we will not be the highest in the market. And often what happens is our peer group is paying much more. And then we will tell the founder we are not in at that price. And believe it or not, the price actually comes down. It doesn't come to our price, but it comes in the middle, right? So we were happy at 18 posts. Somebody is willing to pay 30 posts. The deal ends up at 22, 23 posts, right? But we wouldn't go to 30 posts. So In those situations, when we are competing, we encourage the founders to call other founders. And honestly, like I said before, reputation is a moat. It cannot be copied easily. The other piece of the reputation is this referenceability. It cannot be created overnight. So when we are fighting for the next highly competitive SaaS deal, if that person is going to speak to Vijay, hopefully they'll pick us.
And this kind of uh, good aggressiveness I'm seeing in Z47 in the last 4 to 5 years. So what has been the cultural change?
So I'm glad you called it good. People inside call it bad, but no, I'm joking. So look, it's a little bit of a philosophical point. If you sold your company in 2017,
Yeah.
internet was average till then, right? If you look at the evolution, most of us VCs got started in 2006. I would say first decade was a write-off. Now, many of our second funds are actually really good funds. But that's because those companies hit traction later, right? So वो Razor, हमारे एक ही fund में Razorpay, Ola, 5-star of business है.
Right? And how big was that fund?
250 million. So that's a very strong multiple. But our next fund will be even higher multiple than that. So so essentially the first decade was too early for tech. If you look at the evolution of what started happening in 2016, Jio is well known. UPI Rails, Aadhaar by that time had been fully rolled out. So actually, and we show this to our investors, 2016 to 20, India's digital infrastructure was being built. Today, everybody calls it DPI, digital public infrastructure, but it is world class, right? During that phase, DeMon came. Everybody said DeMon was a very bad economic decision. It was a best decision for people like us because it brought everything online. Payments exploded. GST was very important for e-commerce and B2B because it created a single market. And then COVID came, but your wiring was complete. So to answer your question, 2016 tak to survival tha.
Okay.
17 is the first time we started seeing some of the things start to take off, 17, 18. So that's the time we said, basically your mind unlocks and you start thinking about the future. So we said, what would Matrix India at that time look like in 2022? So we came up with M22. Then 2018-19, when we raised our next fund, by that time, actually Rajendra had gotten us started on this experience founders. That experience founders are coming out. So we looked at that and we said, okay, what is the next 5 years? At that time, the narrative had started on India being a $5 trillion economy by 2025, by this year.
Yeah.
Right. For the first time, because you were out of the survival mode and you were able to think a little bit bigger, we could actually think of our destiny and the country's destiny and in some ways form some linkages. So then we said M25, Matrix 2025, so on and so forth. Uske baad M25 ke baad fir 10 trillion, 8 to 10 trillion की बात हुई, so 2035 हो गया. उसके बाद विकसित भारत की बात हुई. So actually Z47 came out of 2047. But when you say the aggression and all of that, I think it's just when you move out of survival into something that you're enjoying, then you realize the founders are compounding. You are seeing the kind of value they are creating. It just unlocks your mind. So I think the aggression is more just unlocking of the ability to actually make a difference, get excited by what is happening, and that's what you're saying.
But is the team weekly or monthly KPIs measured on coverage? Like
होते थे, बहुत बड़ी गलती हुई थी. So until 2015-16, they used to get measured on coverage. And we had some review meetings where people would say, how many companies have you met, and this that. So it created what we call a met culture. कि वो meeting हो गई या फिर spreadsheet में आ गया, चाहे 5 minute की है, चाहे 10 minute की है. The quality of the meeting may have been nothing. So people were just filling out spreadsheets. So also again, context was different. Younger people today, they are more people with experience also in the business. So I would say, and this is I learned from somebody very wise in this business. When the markets are thin, coverage is a good measure. So, hum log sab, including me, we used to go to IITs, we used to go to conferences, we used to speak at conferences. Honestly, conferences, you get mobbed later, you are, giving out your card. It's a lot of hustle, but also in a not so good way, it creates a hustle culture. We now joke misdirected hustle, mindless hustle, MH bolte hum log usko, right? When the markets deepen, that becomes a bug, not a feature. Because there is so much going on, then you will end up boiling the ocean. You will end up doing 100 things. Pehle to top of the funnel hi kam tha. So it's okay. You have to keep creating the top of the funnel. Now there's so much in the top of the funnel that the processing becomes much more important. You have to be much more thoughtful, right? So I think that is actually a big change that happens as you evolve in this.
From a founder's perspective, I can share my perspective on what changed at Z47.
Yeah.
So for the longest period of time, I saw McKinsey consultants were part
अभी
of
भी
that.
है
अभी भी हैं.
हाँ बट अब वो अपने आप को McKinsey नहीं बोलते हैं
Being part of Z47 till 2019, 2020. And after that, I think you started building operators in the team.
Operators, but से जो बाहर से दिखता है वो अंदर होता नहीं है. So Vikram is a McKinsey consultant, but he worked for us 2 startups. One failed, one succeeded. Rajat is a McKinsey consultant, but he ran his family business. So जो हमारे McKinsey consultants भी है ना वो operators थे. So there is a nuance, but yes, you are right. Now we have actually hired people who are ground up operators.
And your love for second time founders, right? Especially, I think in B2B SaaS, most of your companies that you are investing in are all second time founders.
Financial services में भी वैसे है, but finish your question.
So my is, why this love for second time founders?
नहीं, love is for all founders. Let's be very clear. यहाँ पे भी लिखा है founders first. In fact, if you ask me, there is the fearlessness and the high energy and hustle and all that I really, really enjoy about the first time founders. And then there's the thoughtfulness and the method, all of that I get from the experienced founders. The mix, by the way, globally is 60-40. And if you look at value creation, it's 50-50. Okay. What happened was actually very interesting. We were at an offsite, 2016-17. Again, the time where I said success started becoming apparent, some unlocking started happening in thinking. So Rajendra does, many analytical things for us. So he went up with a flip chart in one of our offsites and he said, look at all our successes. So Ola was clear, Practo was clear, Off Business was looking interesting, Razorpay was looking interesting. In those days, there were others, Tribo, other companies, which were all young first-time founders. And then if you looked at the next set of value, you could see that these were coming out of a different set of companies. So actually the number was, in 2016, the number of companies worth more than 500 million were 13. And one was from an experienced founder. It may have been Freshworks or one of those. When you looked at, fast forward to today, about 50%. So I think the 500 plus are 150 or whatever. Similar to the unicorn number, because the 500 to 1 billion is not that many. And about half are experienced founders. So we could see, the classic Wayne Gretzky thing that where's the puck going? The puck was going there. Our strength was here. So that's when we developed this paper. The podcast started then. The networking and mining. So instead of just going to the IIT conferences, you now start essentially networking in all these companies. Your Jitens had emerged. So it was very much a conscious call to say more value creation backwards. Now, you also had asked that what is different about them, right? I'll tell you, after getting to know them, we realized कि ये बहुत different archetype है. First time founder archetype is completely fearless, very much run fast and break things, classic YC kind of a playbook. And they will create tremendous value. They will disrupt a lot of things. Take Zepto as an example. Now, how that company ultimately does, we'll see in terms of capital efficiency, but it has woken up everybody and it has changed the mindset. It's like when Bhavish came, started Ola, right? So first-time founders will really disrupt markets. What experienced founders do differently, they generally don't take market risk, right? They will go after deep markets. It's much easier to build businesses in deep markets, okay? Having built a company once, they will typically be very profit-driven. So they will chase deep profit pools. Now, if you are saying that the market is deep, so I'm not taking market risk, and the profit pools are existent, so you're not taking that risk, तो फिर करना क्या है? So what they spend a lot of time on is thinking distribution. There's this famous debate in the US. Does product matter or does distribution matter? Right? Basically, both matter. But a lot of people say distribution matters more than product. Second-time founders actually end up thinking more distribution than product. So they're much more GTM-led and stuff like that. I'll tell you 2-3 other things. Very different archetype. First-time founders get off the ground very fast. When I first started working with experienced founders, I used to say, यार 6 महीने तक कुछ नहीं हुआ.
हाँ, मतलब 24 months तक कुछ नहीं होगा.
कुछ नहीं होगा. पर जब करेंगे, तो suddenly with a bang, right? If you think about org building, product बनाना होता है, org बनानी होती है, तो उसमें सब org के लिए इनके पास followership होती है. Often they will start as 3-4 co-founders, or they will start as 2-3 co-founders with a team of 10.
Yeah.
That you take out such a significant risk from the business, right? So I think, like I said, it takes both types. I will tell you, second, experienced founders tend to be really good custodians of your money. They are not doing it for you. They are doing it for themselves.
Their own reputation. I have an example, right? So Paras Chopra I call him a good friend.
What a success.
Right? The best bootstrap success in Wengify. In his next company, Ninty, we were a small check, right? Just wanted to be part of his journey. He figured out within 6 to 12 months that there's not a founder market fit in what he was building next. So he returned 75% of the capital without even taking a single dime of salary ever from that company.
Since you mentioned the term, and I don't know if you've mentioned it before on your podcast, have you explained I've heard product market fit. What is founder market fit?
So founder market fit is basically, I am a founder. This is a market that I understand. Do I see my own personality suited for this market for 20 years?
Yeah.
Basically. Like, for example, if you say traditional dhanda businesses, right? Why a businessman would give his son the key to? Because the son has been sitting on the galla for the first 20 years of his life since he was a baby. So there's some natural tendency. या गल्ले पे चिपकेगा या नहीं चिपकेगा, right? और गल्ले पे नहीं चिपकेगा, then it's obvious to the businessman. For example, the keys from Dhirubhai Ambani went to Mukesh Ambani, but nobody knows that Mukesh Ambani, since 10-12 years of age, was spending time with his father in those field meetings. And so that I consider to be the founder market fit. A market that founder calls comfortably is his own. ये market मुझे समझ में आता है.
No, we've had situations, and I think Anil would be happy, would not mind me saying this. So when Anil Goti was starting his second company, he wanted to do US India SaaS, even though the founder market fit was questionable. And we told him, and he said, nahi, e-commerce mein bahut burn hai, ye wo, whatever. And was not looking in the direction of getting the product market fit. He returned the money.
And you were there investors in his second company?
No, so we were investors in this company where he returned us the money.
Okay.
And then second time around when he started, he said, ab khali aapse lunga. So this goes back to your earlier point. Pehle wale mein he had taken other people's money also. This time we were the lead investors. Now Scapia is much more his founder market fit, and it's doing beautifully. He loves traveling. Many of us love traveling. And so he created a travel first company with a credit card, but a travel first company. So very important founder market fit.
I'll take an example again, like Samay Kohli from Grey Orange, right? When he started his next company again, Buddy, right? I would say he's one of the most thoughtful persons on going about experimenting and being patient with himself. Like, I think first time founders think that they owe it to the VC to show ki kya move kar diya needle, and then because if there is speed and no direction, then there is no velocity.
Correct.
right?
Correct.
So many times it happens in first time founders just because they feel they're accountable to the board.
Yeah.
They try to
It's
show.
a very, very important. I haven't made the note here, Sid, but I think if I had to summarize what was the difference between first time, and again, both are important, but it's the speed and velocity.
Yeah.
So,
and when first time founders hit velocity with fearlessness, I think outcomes like Zepto happen.
Zepto, Zomato,
Yeah,
Ola Electric, all of that happens, right?
So you have been, I believe, building this institution for last 18 years or 19 years.
I'm not going to acknowledge my age, but yeah, go ahead. What's your question?
So my question is, when you first went out to raise LP money in 2006, right? How are LPs thinking about allocating dollars to India?
Yeah.
And how has it transitioned? And because now you mentioned various phases, how did it transition? 2016, then now 2025.
So actually, and I'll give a little bit more macro answer also. देखो 2006 में 2004 to 6 वो India shining, all of that, a lot of people fell for the hype, and we are still paying the price for it. So 2006 there was a deluge of capital. 2010 there was a deluge of capital, right? So how do LPs think? LPs, there is a standard endowment model that most LPs follow. Very simply, 5 to 6 asset classes, because they essentially want uncorrelated returns, right? Look at what is happening in the stock markets today. People who got in at the top of small and medium cap stocks are, obviously feeling a lot of pain. But there's real estate that is still booming, right? So you want uncorrelated asset classes.
What do you mean by that for our audience?
Uncorrelated meaning सब ऊपर same time पे नहीं जाती हैं. जब एक ऊपर जा रहा है तो कोई और नीचे जा रहा है, तो you are uncorrelated. So when you look at your returns across, then they are more stable. Individuals can have different risk appetite. I maybe have the risk appetite to say I'll be all equity. But when you look at institutions, they do need more predictable returns. Okay. So typically there is what is called an endowment model of investing, which was pioneered by Dave Swenson of Yale. तो सब अभी वही लगाते हैं मोटा मोटी. तो वो क्या है? 5-6 uncorrelated asset classes: public equities, debt, private equity, which is venture capital, is a sub part of it. Some people may have natural resources, so on and so forth. And public में भी होता है hedge funds, but 5 से 6 asset classes होती हैं, real estate होती है, right? So then, by the way, they also think of geographies, right? So mota moti, this is the model. Now 2000s, typically people are always hunting for two things: growth and return, right? So India historically has attracted capital wherever people thought growth है यहाँ पे, but वो return नहीं आया, right? So across cycles. Now I think the most instructive of how this has played out is over the last few years, which I'll come to. So China had a big boom from 2008 to 18. Everybody wanted China. Generally what happens in these things is most money actually comes in close to the top. 2022 the war started. 2016-17 Trump came the first time. By the way, people have their own views on him. When Trump came the first time, the general narrative in the world, which you will also remember, was China will be the largest economy in the world. And Trump said no. Actually, that changed the whole thing and benefited India greatly. So he said they can be, but not at our expense, right? So when that narrative started changing, that really changed in 22 when the war started. Russia, China, all these issues started. So then the limited partners said, China is a problem. You would have thought India would benefit, but India did not benefit. Because of what I said earlier, people came to India in 2006. So they said, yaar, India to hamesha story hai. There is a line which says, India never misses an opportunity to miss an opportunity, which is so sad to hear, right? I hear it from, I used to hear it. So we'll talk about how that's
So LPs told you on your face.
Yeah. LPs or later stage investors have said this. There's an even brutal one. India stands for I am not doing it again. So they have all these, they have their perceptions of elephants on the streets and all that. So 2022, when all of this happened, India did not benefit because investors know India and they have generally mixed to negative views because venture capital has had liquidity issues, private equity has had high valuation issues. Actually, the people who have consistently made money have made money in the public markets, right? So one of my LPs always says, we love you guys, but when are you going to beat my investment in HDFC Bank, which I made 30 years ago? Because it was a compounder, right? 23 mein kya hua that people realized, so 22 people said China is a problem, let's pause, let's go back to safety to the US. 23 mein there was a little bit of a oh shit moment that China is worse than we expected. It's not coming back so quickly. So then where should we look? US is highly competitive, valuations are crazy, AI craze, all of that. Where else can we look? Let's look at India. When they look at India, they're like, but we have seen this story before. Nothing has changed about liquidity. You look at the venture capitalist returns, returns, multiples, by the way, are great, but liquidity is not there. So people were still on the sidelines. 24, it changed. 24, many IPOs happened. We had Ola Electric go public. We had 5-Star go public in 22. Many LPs saw a lot of liquidity. Swiggy, First Cry, all of these things are great for the market, right? So that changed the narrative that this time India is more real. And of course, now the markets are correcting. But this time India is more real. And then by the end of 24, I think it became clear to people, or many people took the call that they don't have the patience to stay or think about more investing in China or stay invested in China. So that now India is seeing a benefit. Definitely it's seeing a benefit. Don't look at foreign portfolio flows in the stock markets. Those are much more volatile. But I think this time it's looking much more interesting. Now, when people look at India, then people say which asset classes. Real estate, most foreigners, they'll play through some of these large institutions like Blackstone or Brookfield. But generally, they are looking at private equity, venture capital, and public markets. And what they ask, so we have actually done benchmarking. And essentially, so the people who are, I would say, 70-80% are sold on India. Not all of them are sold on the timing of India. They still question the liquidity cycle. So they say, show us the liquidity and we'll come back. And these are people who are going to invest for 20, 30 years. For them, 2-3 years doesn't matter, right? Then the question is, which asset class within that? Private equity, the view is that prices are too high, but unki liquidity achhi rehti hai. And venture capital, people say, why should we lock up money with you? Your net IRR, is it better than the public markets? So there's something called PME, public market equivalent. So just like ours are funds where we call capital, if the money was getting invested in public markets, what would their return be? Our job as VCs is to beat that. So far, actually, interestingly, on IRR and multiple, we very easily beat it. All of us. The top 5, you said, the 5 firms or whatever. Everybody beats it. Issue is वो liquid है, हम illiquid है. तो वो liquidity धीरे धीरे fix हो रही है. I think this year now markets will correct, but when they come back, so many companies, the big thing said that is different is US was built on the back on China. The technology investing markets were built on the back of companies that went public between $1 to $2 billion. ये 5-10 billion dollar, I know you have a question for me also. ये सब बहुत अच्छा है. We all want it. पर वो bread and butter नहीं है. Bread and butter होता है 1 से 2 billion dollar का IPO. वो शुरू होने वाला है. In fact, it may be 5,000 crore to 10,000 crore ले लो in Indian rupees. That, when that happens in the next cycle, which I believe will happen. And what has changed? Many companies in our portfolio, in your other VC portfolios, many companies have reached a scale where they can get that valuation and they are profitable. So the challenge is, if you go public in that small cap kind of a market cap, it's very hard to exit. But if you're profitable, up OFS may be bech sakte. So I am actually very excited. I think LPs are waiting to see that. I think rightfully so. I think we have to earn our allocation. But I think that's coming. And जो China में हुआ है 8 to 18, जो US में हुआ है 95 to 2010, वो इंडिया में शुरू हो गया 23 में, 22 में, and it will run through, because इंडिया हम लोग थोड़ा हर चीज slowly करते हैं, so it will run for another 15 to 20 years.
And हुआ क्या है? Can you repeat that?
Markets have deepened. Markets have deepened. Founders have, आप देखो कितनी companies have become profitable. Forget the large, quick commerce burn, all of that. That is a very, very important story because it is changing consumer trends. But that's not the story of Indian startups. Many in our portfolio today are EBITDA positive. That's a big change. When I go and meet all the IPO investors, they say, हमको non-dilutive growth चाहिए. आपको, meaning private market investors, हमको dilutive growth चाहिए because हमको markups मिलते हैं. जैसे हमको मार्कअप नहीं मिलता है, हमारा तो स्टॉक प्राइस है, वो डाइल्यूट होता है. तो नॉन डाइल्यूटिव ग्रोथ कम्स फ्रॉम प्रॉफिटेबिलिटी. सो इट इज वेरी की टू बी प्रॉफिटेबल, एंड मोस्ट ऑफ द कंपनीज टुडे आर. एंड देयरफॉर आई थिंक वंस दिस मार्केट correction gets over, 6 months, 9 months, 12 months, so many companies have filed. You will see a deluge of IPOs, but in a good way. Actually, जो पिछले 6 महीने का deluge था outside of tech was froth. I mean, you must have seen some of those companies are going public with no real office and stuff like that, right? But वो tech में नहीं था. अब जब next deluge आएगा, वो अच्छा deluge आएगा with actual real businesses.
And further extending, my question on LP. So how are institutions thinking about this money, this much percentage should go to US, this much to India, this much to Asia or rest of the world?
It changes every year. So I think overall people had reached, so for American investors in particular, America is the most attractive. And by the way, credit to that economy, they still generate outstanding returns, right? So the default is, should we be looking outside? Okay. Like I said before, now people are saying, so some people started looking outside when China was the pull. So at peak, people may have gone to 20-30% allocation to China. India has always been in the single digits at best, maybe 10-15%. I don't think India will go to 30% because I think people have learned a tough lesson in China. I think, but India is benefiting both from reduction in China and Europe. Interestingly, Europe has become less attractive for people. So I expect, देखो इस पे 2 cuts होते हैं. One we discussed is by asset class. So if you say 20%, which generally ends up being 30-40% of the investor pool, their full endowment or foundation is going to be in privates. Then within that, they may say 20-30% is India. तो अगर आप पूरा ऊपर कर लो तो 5 से 10% आता है. But they'll also have publics with the same view, right? So that's typically how they cut it. It's a board level decision. It's an investment committee level decision. They generally go through annual planning cycles. Now, this is typically your most seasoned US institutional investors.
Like Stepstone, Adam Streets of the world.
No. So, well, they are also very seasoned, but they are more fund of funds. This would be the endowments, foundations, all of that. Now, fund of funds are much more nimble and flexible. So they will have dedicated allocations. So they'll have much more in India. They may decide in a particular fund cycle, because they are raising funds every 2-3 years, right? Endowments and foundations and all are permanent capital. Then you have to also look at where has the puck moved. A lot of wealth creation has actually happened outside the US also. They do invest in fund of funds. So those guys are awash in capital. Sovereign wealth funds have become much larger in the Middle East, in Southeast Asia also. So they actually want to invest in this region. Everybody will want 50-60% America. So that is considered the safe haven. But that's typically how it works. But you will find regionally focused people whose allocation will obviously be much more to the region.
And when these folks think about VC and specifically India, then what is their own framework that how much they would,
So there are 2 types. There are the types who say, like if you were thinking about your investing, would you look at return or you would look at asset allocation?
I would look at return.
So anybody who is like basically fairly commercial will say, who cares? Because return dekhna. But what people miss in that set is return over what period? अगर 20-year period पे के रिटर्न देखो और फिर बोलो कि मेरे को 5-year rolling पे I want less volatility, then asset allocation is important. But to answer your question, there are both types of investors. There are types of investors who say, we believe the 20-year view, therefore we will measure VC not just on your last 2, 3, 4, 5 years returns, but we know how this asset class works. And I will invest in public markets and I will invest in real estate. And it's my job, i.e. the VC, the investors, to do an asset allocation such that things smoothen out. This is the most institutional capital. And then there are others like you and maybe even me who would say, just show me return, right? So it's both types. But if you look at through cycle, long periods of time, asset allocation matters. And then you basically divide your risk, divide your reward also, but it is the best risk-adjusted reward that you get.
So I consider ourselves whenever I'm traveling for podcasts outside India or even for our fundraise outside India, since our Neon is a USHQ fund, we consider ourselves as ambassador of India.
Yeah.
We're just not selling Neon.
Yeah.
We're selling this is India, and people will measure ourselves to what we say.
Yeah.
Similar for you and at a much larger scale.
Well, yes. But by the way, one of the LPs was telling me this. You know, we were marketing and selling the story when there was no story.
Yeah.
Now there is a story. So now it's actually exciting. Now it's actually very energizing. So I have actually also been on a evangelization kind of, normally I wouldn't travel much to conferences. But because of all the excitement that is going on, I'm actually very excited to evangelize and market India. In fact, Rajinder is doing a webinar, targeted towards investors who have never invested in India to just learn more about India. It's not about fundraising. It's actually just bringing people up to speed. What's happening in AI? What's happening in all of these things in India?
So now a question on previous trajectory. Like you have been founders like Bhavish in all their ventures. How do you do that?
Yeah. So, I think the difference is when you look at a traditional view of tech founders. And by the way, this has changed. And obviously, Elon Musk has now gone into a different orbit. But if you look at all the images here, there's Jeff Bezos, there's Steve Jobs, there's Mark Zuckerberg, Elon Musk. In the last decade, they have really emerged as business builders who are far more than your traditional tech founders, right? And obviously much larger businesses that have been built. So I have had that thought. Remember you asked me what changed in the last 5 years. I said we started thinking bigger. We started thinking of our destiny with some linkage to the country's destiny. And the founders, man, we have always been founders first. And I looked at those founders, and even it's not just Bhavesh in our portfolio, but even if you look at Dipinder, you look at them and you're like, why are these guys not the new age digital industrialists? And I remember using that word first internally on a podcast here. When you look at Tata, Ambani, Birla, Adani, all of these guys, they are in multiple businesses. That's considered a feature. When a tech entrepreneur wants to do multiple businesses, it's considered a bug. Why? What's the difference? Right? So, and now, of course, with Elon Musk doing so many things, Jeff Bezos doing normal. So many things, it's become normal, right? I think the difference was we thought of that very early and we behave like that. We don't tell them, don't do this, don't do that. I just tell them, boss, and it's not a very limited window of opportunity, but it's like, even if it's a 15, 20-year window of opportunity, these are the builders of the next India, right? And that excites us a lot. And I think they can feel our excitement. They can feel that. You had mentioned my founder's note. I actually wrote in that at some point, of course, we have to make great investments. Of course, we have to have great funds and return a lot of money to our investors. But we did start thinking of ourselves as beyond just financial returns. we started thinking of ourselves as partners to the nation builders. We think these are the next nation builders. So to answer your question, I hope that, one of the reasons Bhavish chooses to keep partnering with us, and he says this also, is that he feels that we emote that ambition. Rajinder you mentioned different types of investments we have done with him. Quikr is one of them. So ambitious. It is effectively OpenAI plus NVIDIA plus your Microsoft or AWS all in one, right? We need it. This has to be a first generation of internet we gave away to the Americans, right? Second generation, actually people captured some value back, right? With the Swiggies and the Zomatos and the Olas, and of course Ola Electric in a different domain. So I think they see that we actually believe that. And that's why they...
So is Bhavish an exception in your portfolio, or are you okay doing similar model, encouraging your best of founders to say, why do you want to exit one company? Why don't you build 3-4 companies at the same time?
I've already done that. And fortunately, my founders are saner than I am. They say, sir, abhi nahi. But by the way, there's a right to play and a right to win. Yeah. Bhavish made his business profitable before he went and did something else. You can't be loss-making in one business and start loss-making another business, right? So, but I have encouraged many founders saying, why don't you think about adjacent businesses? My co-investor sometimes might shoot me, but actually they have, I think the co-investors also appreciate the fact, because now there is Bhavish may be superhuman, he may be able to do certain things differently. Ultimately, there are people who are very good with 0 to 1, 1 to 10, 10 to infinity. I think now Elon Musk, Bhavish, some of these guys may be able to do all of it. If I were to do it, I would not be able to do all of it. I would probably say I'm very good with 0 to 10. And when I reach 10, I will hand this business over to a professional CEO to run to take it to infinity. Then you can do whatever you want, as many things as you want. So,
and are you seeing more companies like Quikr? Like, this is specific question to, building AI and infrastructure startups like OpenAI in India, like the deep tech innovation. Like, a lot of folks have labeled India as a application AI layer.
Yeah. No, actually, if you think, it's worse than that. No, if you look till 2016, 17, all of the models were everybody calls copy-paste models, right? 2017, 18 में at least हमने call ली कि हमको made in India for India में back करना. That's why we went very deep into B2B. That's why we went very deep into financial services. अब made in India for the world भी हो रहा है, right? I actually believe cutting edge stuff is happening. If you ever get a chance to visit the Ola Electric factory, you will see how cutting edge it is. If you get a chance to use the models on Quikr, a lot of cutting edge stuff. NASA is doing AI infrastructure. Atomic Work, Vijay is doing as cutting edge as it comes. AMP is doing AI agents. But if you ask me, is the entrepreneurship at the level that the opportunity is? No. And it is one of the first times I feel that I have always felt that the entrepreneurs are ahead of the market in India. This time I feel entrepreneurs are behind the market, right? If you look at semiconductors, 90%, I don't know if you know this statistic, 90% of chip design goes through India, including the Chinese chips. Why? Cadence, Mentor Graphics, Synopsys, like all these chip design companies, all of them are in Bangalore. Texas Instruments, its entire chip design thing is in Bangalore. The best AI chip designers are Indians. How many chip companies are there from India?
0.
Quikr बना रहा है, अभी धीरे धीरे टाटा बनाएंगे, whatever. तो इस बार I feel कि बहुत comfort zone में आ गया. And I was going deeper कि चक्कर क्या है? You know how much a good engineer would make at Texas Instruments? I heard $400,000 in India, by the way, in Bangalore. It may be less than that, but it's in that range. So बहुत comfort zone में है. Right? So this is one of those where I want to go shake people up and say कि यार opportunity इतनी है. क्या है इसमें? Because you know what Trump is doing with barriers, you know what China has done. These are actually national security issues. People don't want to have their hardware from other countries. People don't want to have their AI from other countries. बहुत बड़ी opportunity है. Now, India has actually, to be fair, announced Mr. Modi when he came back from France. There's a big push on the AI mission. So the government is trying. But we used to say earlier that India succeeds because of its entrepreneurs, despite its government. Right now, it's a little bit opposite. We actually have a government that is really pushing. Entrepreneurs need to wake up. They need to come out and say, this AI moment, if you were to go to the valley, I don't know when you last visited, I haven't visited in a while, but I hear a lot of the buzz. This is the conversation everywhere. Humanoids में क्या हो रहा है, इसमें क्या हो रहा है, उसमें क्या हो रहा है, हम लोग थोड़े अभी पीछे रह गए.
In fact, like for us, I am there every second or third month, and in a recent fund, which is Neon Fund 3, all of our founders, like the CEOs, they have tech teams in India, but they are based out of Valley.
For this reason.
Yeah.
For
Like,
this
because
reason. Buzz ही नहीं है.
it's such a big wave.
Yeah.
Either you are sitting on the wave or you are
Missing the wave.
on the beach on the beach.
Yeah. So I think this one we need to do more. Bhavish cannot be the only person doing it. Nesa cannot be the only person. Vijay cannot be the only person. Sarvam is doing some stuff. All of that stuff. But we need this time in this segment. सबको quick commerce करना है. किसी को deep tech नहीं करना है. There should be 10x more entrepreneurship in deep tech.
Now I want to do a quick rapid fire with you before
These are always the most dangerous.
before proceeding to the last part of our podcast, right? Most resilient founder that you know.
I mean, that's an easy one. Just Bhavish, given all that he has gone through, his Ola pretty much shut down during COVID. He fought Uber. I mean, there are so many different examples, but it has to be him.
The founder that has the highest muscle in enterprise sales for B2B software.
So, I was thinking about this. I don't think I'm competent enough to respond to this, but I'll say one thing. And since we both know Vijay, and then there is the Rocket Lane founder also, Srijibi. I'll tell you one of the very hard decisions to make, very gutsy decisions to make, is to say, I am getting contracts in a certain segment of the market and I won't take them because I want to move up market. Both of them have done that. They don't want to operate in this 5, 10, 20,000, 50,000 ACV. They have aspirations to do hundreds of thousands or millions in ACV. India has never done that. So if they pull that off, I think they will.
I think there's a reason for that. Like Indians have a scarcity mindset. I'm not blaming. Like I'm part of that.
Can you explain that? What is a scarcity mindset?
So, for example, when we come out of a metro,
the
metro has stopped for everyone, but there's a rush to who will go out first. Right?
Yeah. वो basically वो जो पुरानी mentality थी वो अभी गई नहीं है because it was always a scarcity driven nation.
तो वही चीज B2B सॉफ्टवेयर में हो रही है, जो मिल रहा है ले लो. 10K मिल रहा है, 5K मिल रहा है, 20K मिल रहा है, don't miss out on anything. And if you're saying yes to everything, then you're not saying, you are saying no to the biggest chunk.
Correct. Yes, that's very well put.
Yeah. So I think we have to combat that for us to build real enterprise software companies from India and think our own hangover of colonial mindset.
Yeah. And which is credit to Vijay and again, even in Rocket Lane, that they are actually playing, that's the big change. Even if you look at which are the investors chasing those companies, they are the best US investors.
Yes.
So we could be sitting here, I could be feeling very happy कि हम इस company में investor हैं. But जब वो best American investors are chasing our companies, that means they have measured those companies against all the companies.
All the companies in Bay Area.
Yeah. So that's a big change.
And you talked about $1 to $2 billion exits, which are the bread and butter.
Yeah.
But what puts India on the map right now are the $10 billion companies.
Yes.
You have, a few of them. I would say Razorpay, Off Business, Ola Electric, Krutim, all are contenders to be $10 billion companies. Are you able to identify them when they are starting in the beginning? Or
No chance. But I can tell you that, let's take OneCard as an example. See, what makes a $10 billion company? It's not just the founder. Is there a TAM and is there a profit pool? अगर आप credit cards का TAM और profit pool देखो ना, कहीं नहीं गया. And if you look at SBI cards, by the way, when we invested, it was about 10 to 12 billion. अब कम हो गया. So then theoretically, you would say a credit, and by the way, Bob cards, I think, might get spun out, whatever. It was also valued pretty highly. So you could say wo ho sakta hai, right? Then you meet a founder like Anurag who's built ICICI's credit card business. Now RBI, assuming RBI keeps blessing us forward, is there, 5 billion to dikhta tha. 5 billion dikhta tha, but not at start, but it was clear that agar chalegi to this is not 1, 2. This is 5. Country Delight operating in a category when we started was milk. So it was hard to underwrite even $1 billion outcome. Although milk is a very deep category, it's the margins, right? But Chakri was outstanding. And then as the grocery basket started becoming the mainstay, what's the TAM? So you have to look at the TAM and other parts of it. But to answer your question, you don't know at the start. But you typically, my experience has been 18 to 36 months, mostly 18 to 24 months, one starts getting an idea, is this a multi-billion-dollar outcome or is this a capped outcome?
Like, for example, I would again go to atomic work. I would say they're fearlessly replacing ServiceNow.
What is ServiceNow's market cap?
$200 billion, $11 billion revenue, still growing 20% year on year, right? Even if they eat up 1% of ServiceNow market.
Yeah. And by the way, they may be much more profitable because they're building AI first.
Yes.
Right. And I think that, by the way, so just on that point on SaaS, if you look at AI agents and what, I don't know if you have covered this with your audience, SaaS is service as a software.
Yes.
Now there is this concept of servitization of software, which is, SaaS is software as a service. Now it is service as a software. The TAM of services is 10x the TAM of software. If you could replace, so earlier, if you were trying to replace ServiceNow, the buyer would say, okay, your software may be better, but my agents are trained on ServiceNow. Now your sell is, I'll replace your agent. What software I use doesn't matter. I think it's a very big deal. And I hope again, Indian founders wake up to it, because the market cap that was created by Infosys and TCS is waiting. And I think TCS must be again 200 billion and whatever.
Each one of them is above 100 billion.
Yeah. That's waiting to be created in this service as a software. And we have an edge. We have done this before, right? So I actually can also see an Infosys and TCS built virtually from India using agents, right? Then you have to say, what's our right to play, right to win? Because ye to bilkul world flat ho gaya, right? So I think that's where the talent pool, being aggressive, we have always had the best engineers, thinking bigger, I think is critical. And atomic work is a great example of that.
Avnish, when we have India's entrepreneur energy at all-time high, the best of second-time founders have come in the last 3 years. I think as a VC, seed is the only battle to be won, right? Because Series A, you have lost the companies.
Yeah.
What are your thoughts about it?
Of course, that's very convenient for you to say, given your your business, and I'm sure your investors will see it. I don't think about it as stage. I think it is about it as a founder. Get into, by the way, we do invest from DVC. We have discussed, I think we are in 1 or 2 companies together. We should be collaborating more. So मैं actually reverse advice देता हूँ कि अगर हमारा market share देखो, fortunately we are lucky to be in business with some of the best entrepreneurs. Our market share is 20 to 25%. That means we are not in 75% of the good companies out there. Out of those 75%, I think 1/3, another 25%, those founders are really good, exceptional founders. I'm not saying the others are not, but हमारे frameworks हैं उसमें, I think we should be in business with them. So my view, Sid, is, and it is very, very unabashedly founder backwards view, कि अगर हमने founder को seed में miss कर दिया ना, तो we have to get in again somewhere. I would say even in our seed fund in DVC, although the construct of the fund doesn't work, we are one of those that is going to be very, very aggressive, hopefully thoughtfully aggressive about following on with this.
So if you had missed atomic work in seed,
Yeah.
could you have entered atomic work in Series A along with Khosla and the others, Battery?
It's a very hard one. The answer is yes, but I'll tell you there's a nuance to it. So हमारी जो traction playbook है ना, उसमें we actually have this framework that says, do you know this founder over a long period of time? And quote unquote, is this in a glaring error bucket? Okay. So we have this concept internally about thinking in lines, not in dots. Dot is ये event हुआ, ये ऐसे हुआ, फिर ये हुआ और एक ये हुआ. Our traction playbook or our playbook of getting into business with people like this is, we would have missed Vijay, but Pranay, Vikram, somebody would have been meeting him every 2 months. We would not let it get to the Khosla round. We would actually do a preemptive saying, we know we are paying up, your multiple is crazy, but you are in our glaring error bucket. We need to be in business with you. I think that's how we would do it.
So that is still seed plus, but I still think that Series A, as you said, right? You'll still try to preempt a round. You'll not wait for Series A. Revenue.
We are never market participants. We are never participants in market rounds. Actually never. We are always. So we have this concept of P2P. Okay, there should be only two answers to a deal situation: preempt or PWC, which is pass with conviction. There's nothing in between. So we don't want to see rounds happening and then decide if we are participating.
And tell us some of the anti-portfolio companies that you have.
75%, all the valuable. So Flipkart, Zomato, Swiggy. So any great company that we are not part of doesn't mean it's an anti-portfolio. We go deeper and say, was it within our playbook? Did we see it? If we didn't see it, why not? Is that worth fixing? And I think some of these companies, Flipkart in particular, believe it or not, Axel had called me and they said, we are doing this book site, and because you are an e-commerce founder, we want you involved. मैंने अभी बाजी बेची थी, मेरे को लगता था internet users ही नहीं है, so I didn't take the meeting. If I had met Sachin, we would have wanted to be in that round. I would have personally wanted to be in that round. So there are such errors; those won't happen again. Then there are errors like Swiggy, where he emailed us proactively, but we already had a competing investment. So there are many of these. If you look at the pattern is we do very well when we override any views we have on the market by saying we like to back founders. You had quoted somewhere, my quote from what I wrote in the founder letter saying, markets don't execute, businesses don't execute, founders do, people do. Every time we have violated that principle, it's an anti-portfolio. Every time we have followed that principle, it's a great hit in our portfolio. So Ola, we didn't believe in the market, we believed in the founder. So we have a line internally, when somebody says, like the founder, don't like the business, that means we are entering our anti-portfolio zone. So now that we have analyzed enough data like that, then we say, pause. This looks like an anti-portfolio zone. Let's go deeper.
A deeper question, right? When do you feel that you start liking a founder, like from signals?
Yeah, people have different views. For me, it's 30 minutes. So for me, I have so many patterns because I've been doing it very long. It takes me about 30 to 40 minutes of my first meeting to figure out if this is it may not be fully yes, but that I'm getting excited, right? Then you have to do a lot more work, and I would say 20 to 30% of the time, I'll end up in a situation where I get excited and then it changes later. Very rarely, almost never, is it a situation where 30, 40 minutes into it, I'm not really thinking I should be doing it, and later it changes. If that is the case, I have generally gotten it wrong.
And how are teams, like you said, the teams are structured like pod. How are teams independent in their own decision making?
We call it conviction investing, not consensus investing. So actually the pod gets to decide. Now, obviously, if people who have vintage in the business are negative on something, then the pod should think harder. But ultimately, the way it works is the pod does the work. The pod may be paired with somebody who has vintage, and they may do what we call a 2P, second pair of eyes. But then they bring it to a team meeting. Team meeting, people vote. That vote is opened up later for everybody to see, but people vote and they write their comments on what they think. But ultimately, that is to give the pod, the pod and the leaders of the pod input on what others think. That's not the decision. The decision has to be made by the pod. So it's fairly independent.
And you have people in the team who have stayed for more than 10 years. Vikram, Tarun, Rajinder,
Yeah.
right? What makes the team sticky? Like when
Misery loves company. So when there was no market, I think, I keep saying I have a framework that we are very input-led people. Okay. I believe this is an input, and I'm, very much when Dhoni used to be the leader of the Indian team, I used to resonate a lot because I could see all he cares about is process. He never cared about outcome, right? So I tell the team, think about relentless input and reliable output. I think the people who have stuck together for a very long time had very, very similar views on just being relentless in input. I think we are culturally very, very aligned. We have never focused on rewards and incentives and who's making what and all of that stuff. And I think that's what has really kept us together. Going forward, that is, if you ask me, the most important deliverable from the leadership of the firm is to continue that kind of a culture, right? We don't like prima donnas. We don't like people who think they know all the answers, right? So we don't like politics. There are almost unwritten rules that if you're going to be this type of person, then this is not the right place for you. We have value system called the Zen 10, which we rolled out with Z47. So Zen 10 are essentially the values that we all aspire to. One of which is founder's mindset. What does that mean? Don't come to us with problems, come with solutions. As a firm and a leadership and a culture, if we are not giving you the resources you need to solve a problem, then it's a problem that we have. Otherwise, go and figure it out. I would say I'm very grateful and proud that I think it's a very entrepreneurial firm, top to bottom. Then we have this concept called Own Alpha, which is almost a superpower. What is your superpower? Can we channel that superpower towards what the firm needs as a superpower? So there are some tenets, and I think if we are able to bind the firm better around those tenets, then that's what. And it's up organic. It's some of it was people with vintage. I'm very grateful to, like, Vikram is now 15 years, Rajinder is 14. Tarun is 12, 13, something like that, right? So, वो तो common language automatically built हो गई है over a period of time. But now that you don't have the luxury of time, how do you inculcate that much faster for newer people? And that's some of these value systems.
Thank you so much, Avnish. Loved this conversation.
Thank you. I'm very happy to be on the second most popular show. Lovely flowing conversation, and good luck.
Thank you, Avnish.
Cheers.